today's economy, managing personal finances can feel like a juggling act. With rising costs and stagnant wages, saving money is more important than ever. Yet, many of us find it challenging to change our spending habits. Did you know that the typical saver's journey involves building up savings only to drain them for significant purchases? It's a cycle that many of us get stuck in. But what if there were strategies to help you break free from this cycle and start accumulating wealth? One of the most common questions I get is, how can I save money if I don't make a lot? It's a great question. The key isn't just about making more but spending smarter. I'll show you how to audit your expenses, prioritize your spending, and even use technology to find savings you didn't know existed. I'll explore practical tips and tricks that can help you cut unnecessary expenses and boost your savings. From mastering exchange rates and interest rates to understanding the best times to buy, I've got you covered. 1. Reduce credit card spending. Paying off your credit card in full each month is great because it keeps you clear of interest charges. But there are other clever ways to avoid overspending. It's handy to have your details autofill when shopping online, but it can also lead to buying things on impulse. Try deleting your saved credit card info from websites and browsers to help curb those spontaneous purchases. It's wise to have one credit card for emergencies or for budgeted expenses, but do you really need to carry all of them? Storing your extra cards somewhere out of reach, like a drawer, can help you avoid debt. Just remember to keep up with any payments on those cards. Why not try a cash-only approach for a bit? Paying with cash when you're out shopping can make you more mindful of each purchase, helping you spend less overall. By adopting these simple habits, you can keep your spending in check and enjoy a more relaxed relationship with your finances. 2. Consolidate your credit card debt. If you're looking to cut down on spending and tackle those high-interest credit card debts, consolidating might be a smart move. Here's the idea. You take out a personal loan with a lower interest rate, say 11% APR, and use it to pay off your credit cards that might have a higher rate, like 19.99% APR. This switch doesn't save you money right off the bat, but it does reduce the amount of interest you pay over time. Think of it this way. If you're only making the minimum payments on your cards, interest keeps building up each month. For example, in 2019, the average family with kids paid about $1,382 in credit card interest alone, based on an APR of 16.97%. By lowering your interest rate through consolidation, you could save a chunk of money, maybe around $500 a year, that you could then put towards an emergency fund or other important financial goals. Just make sure not to keep racking up more debt on those cards after you've paid them off with the loan. By managing your debt smarter, you can slowly but surely get on top of your finances and ease some of that financial pressure. 3. Cook at home. Eating out can really add up, but cooking at home can be a more budget-friendly choice. On average, food expenses take up about 10% of a typical household's budget. By choosing to cook at home more often, you can save a significant amount of money. Start with a weekly meal plan. This helps you avoid buying things you don't need and cuts down on waste. Look for digital or paper coupons to reduce grocery costs. Apps like Coupon Sherpa, Coupons.com, Ibotta, and Rakuten can be handy. Consider shopping at low-cost grocery stores such as Aldi or Lidl. Opt for generic or store brands when possible. They're usually cheaper than name brands. If you have storage space, bulk buying at stores like Costco or Sam's Club can lead to savings, as long as you're purchasing items you really need and will use. Cooking at home not only helps your wallet but can also be a healthier option compared to eating out. 4. Shop around for insurance. Looking for insurance? It's a good idea to compare options because you might find lower prices. Experts suggest getting quotes from at least 3 different providers for car, home, and renter's insurance. Remember, the cheapest option isn't always the best, so consider what's covered too. Agreeing to pay more out of pocket if you make a claim can lower your premiums. Think about dropping coverages you might not need. Check if you qualify for any discounts, like lower rates for driving fewer miles than average. If you buy more than one type of insurance from the same company, like car and home insurance, they might reduce your overall cost. Shopping around helps ensure you get good coverage at a better price. 5. Think carefully about big purchases. Big purchases can lead to big debts. It's wise to carefully consider before buying expensive items like a new TV or sofa. Here's a simple strategy. Wait for 24 to 48 hours before you buy. Ask yourself if you really need the item, or if you can wait until it's on sale, or until you can afford to pay in cash or quickly pay off the credit card used. Often, you might realize you don't need it after all. If you still want to make the purchase, consider these questions. Is there a cheaper, used option? Sometimes, a used item might be just as good. Is it on sale? If not, find out when it might be. Did I shop around? Maybe another store has a better price or a better product. Can I afford it now? It might be better to save up rather than charging it to a credit card. 6. Consider secondhand clothes. Buying secondhand clothes can save a lot of money. Americans spend an average of $1,866 a year on clothes. You can find good deals at thrift stores, consignment shops, garage sales, and online sites like ThredUp, Etsy, and eBay. If secondhand shopping isn't your thing, here are other ways to cut clothing costs. Look for sales. Especially check clearance items at discount stores like Ross Dress for Less and TJ Maxx. Choose quality over price. Better made clothes might cost more upfront but don't need replacing as soon. Ask for a discount. If an item is damaged, like a missing button, ask for a price reduction and fix it yourself. Buy off-season. For example, winter clothes tend to be cheaper in summer. 7. Consider dropping cable. With options like Hulu and Netflix, you might think about dropping your traditional cable TV, a move often called cutting the cord. You could save a good amount of money, potentially over $500 a year, by switching to streaming services. Negotiate with providers. Call and threaten to cancel. They might offer you a better deal to stay. Purchase your modem and router instead of renting to save money over time. If you lower your internet speed, your bill might decrease without a noticeable difference in service. Always ask new providers if they have any promotions or discounts. Consider switching providers, especially if another company will cover costs like early termination fees from your current provider. 8. Check your subscriptions. It's easy to forget about ongoing memberships and subscriptions, especially when they auto-renew. Take some time to review your bank or credit card statements to spot any services you no longer use or need. Here are some common ones to reconsider. Gym memberships. If you're not going to the gym, this could be a significant unnecessary expense. Digital subscriptions. Americans spend a lot on digital services like streaming music and dating apps. Print subscriptions. Newspaper and magazine subscriptions can add up. Health and beauty boxes. Monthly subscriptions for products can be costly. Meal kits. These services are convenient but can be expensive, often costing $60 a week or more. If you don't want to go through your statements, some services will review them for you. Cancel unnecessary subscriptions, or negotiate lower rates for a fee. Thank you for watching, and let's start saving smarter, not harder. See you in the next video.